One of the most important decisions businesses make is hiring employees. With the hiring of employees comes the responsibility, though, to adhere to labor laws and payroll regulations, the accurate calculation of wages and deductions, as well as the submission of payroll taxes to government agencies. In this video, we'll cover the calculation of employee earnings and payroll taxes. The first step in preparing payroll is to compute the gross wages or salary for each employee. There are several ways to compute earnings. If employees are paid on an hourly rate basis, then workers earn a stated rate per hour and earn overtime at time and a half, meaning every overtime hour earns 50% more than the regular hours if they work more than 40 hours a week. In some states like California, time and a half overtime applies when employees work more than 8 hours a day. Double time applies if the employee works more than 12 hours in a single workday or more than 8 hours on the 7th consecutive workday. The employee's gross pay depends on the number of hours and overtime hours worked. Salary basis employees can earn an agreed upon amount for each week, month, or other period. The Fair Labor Standards Act states that employees must be in certain administrative, professional, creative, or executive positions and earn at least $684 per week to be considered a salaried employee. California has set a minimum salary of $1,120 per week per employee to be considered salary. Some salaried employees are also overtime eligible, but typically there's no overtime pay for salaried employees. Commission basis employees, usually salespeople, earn a percentage of the net sales that they generate. There are different rules for inside and outside salespeople. Inside salespeople are employees where the customer comes to the place of business, and for those employees, the FLSA applies. And employees must earn a minimum wage. Outside salespeople are employees where the employees go to the customer to make a sale. In the case of outside salespeople, the FLSA does not apply, and the total pay of an outside salesperson can be below the minimum wage. Piece rate basis employees are paid based on the number of units they produce. That could be, for instance, a bakery employee who's paid based on the number of cakes decorated, or a social media employee who's paid based on the number of social media posts. However, the employee must be paid at least the minimum wage under the state or federal law. The Fair Labor Standards Act, or FLSA, protects non-exempt workers through its rulings on minimum wage and overtime. What is a non-exempt employee? It's an employee that is subject to the provisions of the FLSA. Typically, hourly workers, unless they work for companies that are not subject to the provisions of the FLSA. For instance, companies who engage in no interstate commerce whatsoever, which is really becoming quite rare because of e-commerce. And firms that have less than $500,000 in annual business volume. In those two cases, the FLSA provisions do not apply. There are certain businesses, though, that are always covered by FLSA, which are hospitals, schools, and government agencies. The federal minimum wage was instituted in 1938 and is currently $7.25 per hour. California's minimum wage rate, though, is $15.50 for all employers. However, some localities have set their own higher minimum wage rate. For example, in Los Angeles County, the minimum wage is $16.78 in the city of Los Angeles and $16.90 in unincorporated areas. Certain categories of workers, such as hotel workers, have a higher minimum wage rate. For instance, in the city of Los Angeles, employees who work at hotels with 60 or more guest rooms have a minimum wage rate of $19.73. Salaried employees who hold supervisory or managerial positions are called exempt employees because they're not subject to maximum hour and overtime premium pay provisions of the wage and hour law. The minimum wage differs from state to state. As of July 1st, 2023, the minimum wage ranges from $7.25 to $17 per hour. As discussed, there could be higher minimum wages in certain localities within a state. The hourly minimum wage for tipped employees is $2.13 per hour per the FLSA, but employers must pay the employee at least the full minimum wage if the tips do not make up the difference between the full minimum wage and the tip minimum wage. However, tipped employees are not the only workers who may legally receive compensation lower than the minimum wage. Young employees who are less than 20 years old can be paid $4.25 per hour up to 90 days. Disabled workers can be paid less than the federal minimum wage as long as an employer obtains a certificate. And another category are full-time students who are employed at retail stores in agriculture or at colleges and universities. These students can be paid 85% of the federal minimum wage. Starting in 2025, California will ban the practice of paying subminimum wages to individuals with intellectual or developmental disabilities. Unlike the federal requirement, the state of California also does not allow employers to pay subminimum wages to student workers or workers under 20 years old. And the tip minimum wage in California is $15.50 per hour. Here's an example of calculating gross wages when employees work regular and overtime hours. So let's read it together. For 1 week, 3 employees of the Snowshoe Lodge worked the number of hours shown below. All these employees receive overtime pay at time and a half, their regular hourly rate for any hours worked beyond 40 hours in a week. So we need to compute the regular earnings, overtime earnings, and gross pay for each. So let's look at employee number 1. This employee worked 47 hours at $13 per hour, and overtime needs to be calculated for all hours above 40 hours. So our calculation in this case is 40 hours at $13, which is $5.20 plus 7 hours at $19.50 equals $136.50. Plus, so combine all of that is $656.50. For employee number 2, we calculate 40 hours at $9.50, which is $380, plus 6 hours at $14.25, which is $85.50, for a total of $465.50. And then for employee number 3, we calculate 40 hours at $9, which is $360, plus 4 hours overtime at $13.50, which is $54, for a grand total of $414. After calculating the gross wages, we also need to calculate payroll tax withholdings, such as federal income taxes. Employers are required to withhold from employees' earnings an estimated amount of income tax that will be payable by the employee on the earnings. The amount depends on the Form W-4, and there have been a few changes to the Form W-4 in recent years that are not yet reflected in your textbook. There are several different ways to compute the federal income tax to withhold from an employee's earnings, but the wage bracket table is almost universally used. The wage bracket tables are in publication 15T, Circular E. And here's an example of a weekly payroll period wage bracket table on the left. And next to it is an example of a biweekly payroll period wage bracket table. The manual calculation of federal income taxes can be quite complex if it involves pre-tax deductions and dependent exemptions. And if you're interested in learning more about labor laws, payroll regulations, calculating gross pay, as well as fringe benefits, payroll taxes, and payroll deductions, I recommend you check out a payroll accounting class. In addition to federal taxes, employees also have Social Security and Medicare tax withheld from their gross wages. Social Security and Medicare taxes are paid by both the employee and the employer. Let's talk first about Social Security. The Federal Insurance Contribution Act, also called FICA, is commonly referred to as the Social Security Act and provides retirement benefits for workers and dependents of retired workers, as well as disability benefits. The Social Security tax rate is 6.2% and has been unchanged for many, many years. There's a maximum wage limit, though, for Social Security taxes. For 2021, the wage base limit is $142,800. In 2022, the wage base limit is $147,000. And in 2023, it's $160,200. Our textbook, though, uses the 2021 tax rate. This wage limit means that Social Security taxes are calculated to the wage limit, but there is one exception. If the employee works for multiple employers during the year, all employers are required to withhold Social Security. However, the excess above the maximum is refunded on the employee's income tax return. Now let's talk about Medicare taxes. The Medicare tax is closely related to the Social Security tax, and just like Social Security tax, the Medicare tax is paid equally by employees and employers to provide medical care for the employee and the employee's spouse after each has reached 65. The Medicare tax rate is 1.45%, and the tax applies to all salaries and wages paid during the year. That means that there is no wage limit like there is for Social Security tax. The Affordable Care Act created an additional Medicare tax of 0.9% on single taxpayers with earnings of greater than $200,000, which means that single high-income earners will pay 1.45% in Medicare taxes on all earnings and an additional 0.9% of Medicare taxes on earnings that are greater than $200,000. For married taxpayers, the limit is $250,000, and for taxpayers with filing status married filing separately, the limit is $125,000. Employers are not subject to this additional Medicare tax. Here's an example to illustrate the calculation of Social Security taxes. What we have here are the monthly salaries for December and the year-to-date earnings of the 4 employees of Lincoln Project Company as of November 30th. Employees 1, 2, and 3 are far below the maximum Social Security wage limit of $142,800 when we add the December wages to the year-to-date November wages. That is why we have to only multiply the December wages by 6.2% to calculate the Social Security tax. For instance, employee 1 has $9,000 in December wages, and his total wages are below $142,800. So we multiply $9,000 by 6.2% to arrive at $558. We then do the same for employees 2 and 3. Employee number 4, however, has November year-to-date wages of $132,000. And when we add the December wages to the November wages, November year-to-date wages, we get $146,000. That is above the maximum wage limit for Social Security. That tells us that not the entire December wages are subject to Social Security taxes. We calculate the difference between 142,800, the maximum, and the November year-to-date wages of 132,000, which is 10,800, which we then multiply by 6.2% to get $669.60. We're going to use the same example for the calculation of the Medicare taxes. Medicare tax does not have a maximum wage limit, and all we have to do here is calculate the wages times 1.45%. In this case, we don't have to worry about the additional Medicare taxes of 0.9%. There are many other withholdings and deductions, such as state and local taxes. For instance, in California, we have the state income taxes, and we also have state disability tax. In New York, there's a New York state tax and a New York City taxes. Some states don't have any state taxes at all. In addition to taxes, other deductions are withheld from an employee's wages. Some are mandatory, such as garnishments, whereas others are voluntary, such as 401k, health insurance, and other pre-tax deductions. There are also post-tax deductions, which means there isn't a special tax advantage to that deduction, such as donations, union dues, and gym membership. The employer is responsible for withholding and remitting federal, state, Social Security, and Medicare taxes, and other deductions such as 401k, health insurance, and other deductions. Non-compliance can result in significant penalties. In addition, the employer is responsible for the employer share of Social Security and Medicare taxes, state and federal unemployment insurance, and workers' compensation insurance. Often, the employer also matches the employee's 401k deduction and pays a significant portion of the employee's health insurance and disability insurance. All of the payroll information for the payroll period is captured in the payroll register. Here's an example. It starts with the name of the employee and their marital status. Typically, you'd also see the number of dependents listed here and any additional withholdings the employee is requesting. Next are the number of hours and the hourly rate and the calculation of the regular and overtime wages. The payroll register then continues with the taxable wages for Social Security and Medicare taxes. And typically, there would also be a column for federal and state taxable wages. In our example, all of the taxable wages are the same. However, when the employees have pre-tax deductions, the amounts subject to federal, Social Security, and Medicare taxes would be different from the gross wages. The next set of columns are the deductions for Social Security and Medicare taxes, and income taxes as well as health insurance. Finally, we get to the net pay, the check number, and the distribution of the wages by type, in this case, office salaries and shipping wages. Now that we've learned the basics about gross wages, taxes, and deductions, we can continue in the next video with how accountants record this information in the general journal and post it to the general ledger.